Hello and welcome back to CEO.CA's Inside the Boardroom. My name is James Patton, and today I'm joined by Mark Selby, CEO of Canada Nickel. They trade on the Venture Exchange under the ticker CNC. Mark, thanks so much for joining us today.
No, glad to be here.
So I want to get right into it. Canada Nickel has had a series of major financing announcements over the past 5 or 6 weeks. Some really high numbers out there, $500 million from Export Development Canada, another $500 million support letter from a leading financial institution. Walk us through what's the environment like right now for raising capital. How have you been able to secure such significant financing packages?
Yeah, the key here is obviously, our Crawford nickel project, would be the third largest nickel sulfide operation if it was fully ramped up today, in the Western world's largest operation. So again, with the government focus on getting critical minerals production happening as soon as possible, we're in a great position to be able to, be the first to attract that kind of capital. So those two announcements, very important. So, just as a step back in terms of the package, the capex and the feasibility study was just under $2 billion, but obviously you have to pay interest on the money you borrow, and you've got G&A that you have to cover before you're cash flow positive. And so, what you need to solve for is effectively about $2.5 billion US. So what we're doing is looking for $1.5 billion in debt financing and $1 billion in equity. And so the two $500 million announcements are a big step, two big steps, in terms of getting that $1.5 billion debt financing. And in fact, actually gives us pretty good visibility, over a path to that entire amount. $500 million US from Export Development Canada is again, letter of intent. We still need to go through the next phase of due diligence, but the key piece there is not only the quantum that they're prepared to offer, but that they would be the mandated lead arranger for the entire project debt facility. So Export Development Canada is recognized, among the export credit agencies globally as a leader in the mining space. And so a lot of the other export credit agencies globally, will rely on whatever due diligence and terms that Export Development Canada comes up with. In a $2 billion project spend, we'll have, lots of money spent in the United States, lots of money spent in Europe. We have a potential Korean partner with Samsung, and we're looking, across Asia as well for other partners. And so, with that Export Development Canada lead, that opens up, the export credit agency market for the balance of that amount. We'll have some small sliver that'll be private, set of private banks, and we're in conversations with them in terms of the facility. Again, given the scale of what we're doing, the jurisdiction that we're doing it, relatively low technical risk, it ticks a lot of boxes for the private lender. So again, those two announcements really give us a really clear line of sight on the debt facility. On the equity side, the $1 billion, we've been saying all along, we qualify for over $600 million US in refundable tax credits from the federal government. When you add that in with the $100 million Samsung option, where they can buy 10% of the project for $100 million US, and they don't get their offtake unless they make that investment. Right now we're really solving for just $300 to $400 million, which isn't a great place to be in. And the plan is to get that done by year end or early in the new year.
Fantastic. Thank you so much for that overview. I guess a couple of points I'm going to pick up on there.
Yep.
Really interesting to hear that by Canada, the Export Development Canada kind of taking the lead there, that it maybe unlocks some funding from other national agencies as well. I guess on the $500 million support letter, you said it's from a leading financial institution. The terms of that are still not disclosed, or is that going to be disclosed in the near future?
No, those we have to go through the due diligence process first, and then as we put the syndicate together, then the final terms will come together at that point in time. So it's still a ways.
Okay, and the remaining, $300 million or so that you're looking for is going to be mostly from the equity side.
Yeah. So what we're looking to do there is we've got Scotiabank and Deutsche Bank working on getting either project partner at the project level, some additional offtake financing, so that our goal here is to be able to raise the remaining capital that we need without having to do a major equity raise. And so, again, as someone who's got most of their net worth in this company, the last thing I want to do would be some big equity raise to dilute the ability to realize the value from the project, which again we think is pretty substantial. So that's the path we're going down. We've got decent interest here, and so we're on track to be able to move forward here.
Great, and I understand your pretty close relationship with Government of Canada. You were at a press conference with the Minister for Natural Resources very recently, and you had a $4.38 million contribution from the Government of Canada towards pre-implementation studies for electrical infrastructure at Crawford. Maybe can you tell us how closely you're working with the government on this project, and what's the significance to Canada more on a more macro scale, I guess, for investing in a project like Crawford?
Yeah, no, I think, the key thing there is, there was a call for basically funding from the Canadian Mineral Infrastructure Fund, for engineering studies. And, that's the phase that we're in right now in terms of building the project. And again, targeting making a construction decision when we receive permits mid next year. The key thing there is, again, there was only a handful of companies at the press conference. So, the fact that we were there sort of, I think, suggests, where the project ranks among the priorities for the government. But I think what's even more important, again, we're solving for $300 to $400 million in terms of remaining capital. The Canada Minerals Infrastructure Fund is is capitalized for $1.5 billion. They're announcing different streams for different funding. So, our hope is, given that they're funding the engineering portion of it, we could look to see, to get a decent chunk of funding from the infrastructure that we have to build. So again, any other additional one-off government funding that we're able to obtain, comes off that $300 to $400 million that we ultimately have to raise. And again, we've got a great relationship with both the federal and the provincial government.
Fantastic. Well, Mark, thanks a lot for the overview of the finances. I want to maybe just take a look more operationally at Crawford in terms of some of the work that's ongoing there. You have regional drilling ongoing. There's also been some developments with Net Zero Metals, your wholly owned subsidiary.
Yeah.
Walk us through those developments, and what are the next steps at Crawford besides the financing packages?
Yeah, no, I mean, it's been a pretty exciting 6 weeks in terms of the package of releases that have rolled out. So, both the exploration and then the advisory board are sort of the bookends of the process. So, on the exploration side, we announced, drilling results from 7 different properties. Most juniors are good to have 1 or maybe 2 good projects. We're blessed that we are, unlocking an entire nickel district. So, being able to announce decent results from 7 different targets, we think is outstanding. And again, I think speaks to the potential of the Timmins Nickel District. And we think the potential to become, the world's largest nickel sulfide district. So, that was great to see. The other big announcement was around the advisory board and a new appointment to the management team at Net Zero Metals. Again, we're not only building a mine, we're going to build the next stage processing plants as well. Governments want that to happen. Governments are prepared to fund that to happen. And again, we're in this wonderful window where the government is going to give you lots of free leverage to build assets that will last for many, many decades. And so, we're trying to take full advantage of it. So Net Zero Metals is our downstream business, nickel processing plant, steel and alloy processing plant, taking the nickel chrome magnetite feed that we produce. So the advisory board, one of the key guys who's joined was at Outokumpu and ThyssenKrupp when they built the last greenfield stainless steel mill in North America. So to get someone of that caliber is great. Another guy, basically ran the Global Iron Metallics Association. Again, focused on creating iron feeds for the alloy and steel industry. We've got one of the leading pyrometallurgists, who worked on pretty much every nickel pyrometallurgy project that Inco did for many, many decades. And with Boyd Davis, one of the leading process development people involved. So again, to have a roster like that get involved with our downstream business should give people some real comfort that, this is really going to happen. And, again, attracting that caliber talent is something we're very excited about. The other piece, Scott Lauschke, who's just joined us as head of business development for the downstream business. Again, someone 30-year career in the alloy steel business down in the United States. That's the specific subsegment of the steel market that we're going after. So again, to have somebody with his experience base and network get involved in the company, I think speaks to the quality of the opportunity. And again, with the steel and alloy plant, given our carbon capture capacity that we have, that we've developed, we think we can initially develop a low carbon product and then eventually get to a zero carbon product using, biochar from the area. So again, great news on that front.
Great. Yeah. Thank you very much for that overview. I guess, what's the advantage of having Net Zero Metals as a wholly owned subsidiary, the downstream business, rather than being part of Canada Nickel or spun out as a totally separate company?
Yeah. So the thing that a lot of investors don't realize is that you've got premiums today in the North American market. So, carbon steel prices trade at premiums to the carbon steel prices in Europe and the carbon steel prices in Asia. Stainless steel prices trade at a premium in North America to Europe, to Asia. Nickel prices trade at a premium to those markets. And so, being able to build those processing plants locally allows us to capture those premiums that are available in this market. And so, with the Biden administration just announced a whole new round of tariffs on a whole range of metal products from China and other countries. Being inside that tariff wall means we get to capture the value, that those tariff walls generate. And so it just, from a business perspective, just makes a whole lot of sense to get done. And we're quite fortunate that Timmins is a region that's very supportive of that kind of processing. And so, look forward to generate even more jobs, more investment, for the Timmins area.
Absolutely. I guess you touched on some Biden administration tariffs there, and obviously there's been some significant tax credits in Canada as well, and government support, with elections coming up in the US and potentially near future in Canada as well. Mm-hmm. Is there much scope for these programs to change, or are those commitments already locked in?
No, in terms of in terms of Canada, it's currently law. They would have to undo them. I'm not sure. It's one thing to not add anything new. It's a whole other thing to unwind programs that already exist. Mm-hmm. I think too, in the U.S., obviously, lots and lots of airtime about what's going to happen over the next 3 weeks with the U.S. election. For us in nickel critical minerals, at the end of the day, there'll be no net impact. There'll be two different paths. Trump's going to throw lots of tariffs and anti-China stuff all over the place. And Biden, if Harris wins, they'll continue to push, on the IRA compliant part. And again, as one of the only new sources of IRA compliant nickel globally, it'll work out well for us. So again, either way we win, it'll be just a different path to get there.
Okay, understood. Thanks for that clarification. I guess let's talk a bit more about the global nickel market. There's been some interesting developments, this year in terms of Indonesia specifically. We're seeing grades decrease. We're seeing them become a massive importer from the Philippines. Obviously, Indonesia previously had been, really the dominant player in nickel and was exerting a lot of influence, but maybe we're starting to see that turn now. What are your thoughts on kind of the nickel market over the next 1 to 5 years, and what's Canada's role in it going to be in relation to Indonesia?
Yeah. So in terms of Indonesia, I don't fear Indonesia. They've become the dominant producer over the last 7 years. They now individually, as a single country, control more of the nickel market than OPEC did at the peak of its power in the early 1970s. And again, that was a collection of countries that controlled that much of the oil market. But again, the resource they have is not unlimited, right? And so these types of laterite deposits, which are shallow soil over large lateral extents, they're very easy to high grade. So they've been high grading for nickel grade, they've been high grading for iron to nickel ratio, and they've been high grading for slag chemistry. And so what we've seen over the last 4 or 5 months, and as you pointed out, is we've seen this massive increase in imports of nickel ore from the Philippines. And literally to the extent that their July imports were almost 5% of global supply. So if Indonesia is supposed to be this, all-encompassing, all-out dominant producer, why are they having to resort, to fill up some of the processing plants in Indonesia with ore from the Philippines? So I think that's going to be an interesting factor to follow through the end of the year. The Indonesians are limiting the amount of ore that's available. Philippines is about to go into its rainy season, so its ore production drops. So we might even see a little bit of squeeze. Nickel prices popped up over $18,000 a ton. I think that was a bit of a sneak preview, and I think we may see a squeeze into year end, back up to the $20,000 a ton level. but again, it should really signal to the market that, Indonesia's, ability to supply is not unlimited. Again, using the oil analogy, it would be like Saudi Arabia having to import oil from Iran or Iraq to keep its refineries full, right? That's how significant this is. In terms of Canada's role, the reality is, consumers want a choice other than, the nickel in Indonesia we've been referring to as blood nickel, just because of the massive environmental footprint, the massive community impacts it's having in a very concentrated region of Indonesia. And so consumers want an alternative, to nickel that comes from, some certain mines in that area and the way it's produced. And so, the ability in Canada with our mines that can capture a huge amount of carbon, and are going to be compliant with Western environmental standards, compliant with Western labor standards, creates a real alternative for Western consumers. And we look forward to not only with Crawford, but hopefully multiple projects in this Timmins Nickel District as we move things forward.
Fantastic. Well, Mark, just to wrap up, maybe in your view, what sets Canada Nickel apart from some of your competition, and why is now an interesting time for investors to be paying attention?
Yeah, so we've, bottom line, we founded this company just over 5 years ago. We've taken a deposit from fifth drill hole to feasibility study. We've just in the process of completing the second phase of the permitting process, and expect to have permits in less than 6 years from that fifth drill hole. We've continued to rapidly advance it. We've got the team to take it forward through into construction, and I think that really sets us apart, from a number of our junior companies. That's number one. Number two, we're unlocking an entire district. We think there's the potential for multiple Crawfords in the region, and the drilling success that we're having is really highlighting that. And then three, we want to capture all the value locally by building these downstream businesses. And again, there's a period in time right now where the government's prepared to give us lots of free or low cost capital, and it's a once in a generation opportunity to create an asset base that's going to last for decades. So that's the case.
Fantastic. Well, certainly a compelling case, Mark. Congratulations on securing your 2 latest mega financing packages, and I'm sure there'll be more updates to come in the near future. Thanks so much for joining us today.
No, thank you.